Whenever we buy or sell real estate, there are issues of GST and capital gains. A lot of our viewers inquired for the solution. To answer this, in today's episode of Your Home Inside Out with KS Associates, we have Krishan Khanijo. Krishan Khanijo is a chartered accountant practicing in Delhi with branches in Pune and Rudrapur for more than 30 years. He has held positions of CFOs of reputed companies, leaders in their respective industries before venturing into professional practices. He specializes in income tax and GST in addition to the core fields of audit and internal control system. Taxes on capital gain is a vast subject. Here we shall briefly discuss with him the major aspects of taxation of capital gains arising out of real estate transactions. Welcome Krishanji to our show.
Thank you, Karan. Thank you very much for inviting me for this show. Thanks a lot, and you're doing a wonderful job.
Thank you.
By inviting all the professionals and specialists of their field.
We actually had a lot of queries regarding, the chartered accountancy practices or, how the, let's say, taxation affects the real estate. So the first question which came from a lot of audience, who have asked for this, then at what point any person who is, looking to buy or sell real estate should engage a CA or take advice from a CA?
Karan, as happens for any transaction which involves profit gain or tax, we must do some planning.
Okay.
So normally anyone should approach his chartered accountant or a professional when he or she is planning to buy or sell any real estate.
Okay.
What we have found, my experience of so many years is more than 30 years, that people approach us once they have done the transaction and then land us, okay, this is where we are, now what to do with this? There are a lot of tax, how to save tax. Now if you come in advance, we can plan something and advise you how to save on taxes legitimately, and by not only tax planning but by your financial planning also for that transaction.
I've realized a lot of time, people can gain or lose a lot on taxation only unless they plan it properly.
That's it. That's very important, that the professional should be approached in advance rather than approaching post the transaction.
Okay.
And then only it's management of what has been done. You can't plan. So savings and all get affected largely.
So majorly, from a lot of real estate transactions, the thing that comes out is the capital gain. So there is a lot of ambiguity about, what is considered as capital gain. If you can just explain it to the audience, in a simple words, what is a capital gain?
Normally when you read the word gain along with capital, it means there is a gain, there is a profit.
Okay.
Now the income tax realizes there can be a gain or there can be a loss on sale of real estate transaction also.
Okay.
Even if you may be getting money much more than what you had invested, then still there can be a loss. So there is a very complicated and intricate calculations involved. But for common parlance, I'll just tell you, the capital gain is a difference between the sale price that you receive and the actual cost you have incurred, which is adjusted for indexation. For inflation over the period of time you held the property. So even for out of the sale proceed, you can reduce the brokerage and any expenses which you have directly incurred for sale. So the difference is capital gain.
So in simple words, whatever you have put in money to buy a real estate or buy an asset, and whatever you have got when you sold it, so the clear difference is the capital gain.
Yeah, it is a clear difference is the capital gain, but the cost is adjusted for the inflation. If you have held, because normally whatever capital gain is not only on a sale of real estate assets. It is on other properties also, movable properties as well as immovable properties. It can include jewelry, gold, bullion, precious stones, artifacts, paintings. Like there are so many things on which capital gain is taxable. So normally here you are talking about real estate transaction.
So in capital gain also, we have always heard two types of terms. One is short-term capital gain, another is a long-term capital gain. So what is the difference between both of them?
Short and long, it is defined under the Act. Basically this gain or capital gain is a technical term as per Income Tax Act, and they are divided into two parts. Long-term capital gain is on any asset, whether it is immovable property or other assets, as I said earlier, which is held for 36 months or more.
Okay.
Right, 36 months
or 3
by
years.
the calendar,
Yes.
or 3 years means it has to be 36 months plus.
Okay.
If it is 1 day less, it will be short-term capital asset.
Okay.
Other than shares or securities which are listed, if these are held for 12 months or more,
Okay.
these are called long-term assets. And
Okay.
the difference between the distinction between the two is essential because the tax rate is different for long-term capital gain as well as short-term capital gain.
Okay.
Otherwise,
So
there is a gain on both situations.
And so long-term capital gain have lesser tax and the short-term capital gain
Yeah,
have more
long-term
tax.
capital gains have less tax
Okay.
than short-term capital gains.
Okay.
And other than shares, where the short-term capital gain is 15%, the short-term capital gain on any other asset is treated at par with your other income, except for all short-term capital gains are treated at par with your other income.
Okay.
And added to the total income, and you are charged tax at the normal rates,
Okay.
whichever slab you fall in.
Is there also any way we can save on these capital gains, either long-term or short-term?
Yeah, there are ways where you can save on capital gains tax.
Okay.
Right. There are different provisions allowed under the Act,
Okay.
and there are some planning which also we can do, depending on what in the past transaction you have handled or transaction done by you, and we can plan and save the tax. Like for example, if you have sold a house, a residential house,
Okay.
and you want to further invest into another house.
Okay.
So whatever gain you have earned on the sale of the residential house,
Okay.
gain only I am saying, I am not saying the total sale consideration.
So what is the difference basically in the sale price as well as the buying price?
Suppose you sold a house for 5 crores rupees,
Okay.
and your cost of that house was 2 crores,
Okay.
and there is a gain of 3 crores on this.
Okay.
Now if it is a residential house that you have sold, you are required to invest only 3 crores
Okay.
into any other residential house
Okay.
for 3 crores or more. If you invested that amount in a residential house, then there will be no tax on 2 crores that you have saved out of 5 crores.
Okay.
That 2 crores is available for your use, whatever you want to do with that, you do.
Okay. Okay.
If it is not a residential house, it is any other property, then the entire sales proceeds. In this case, 5 crores will have to be invested in a new residential house to save the taxes on the gain you have earned.
So if I've sold some commercial property and whatever proceeds, if I invest it into a residential property, do I save the capital gain, or there is no such provision?
No, if you have sold a commercial property
Okay.
and you invest the entire sale proceeds, net of brokerage and other expenses that you've incurred,
Okay.
into buying a new residential house, then there will be no
Capital
tax
gain.
on the capital gain which you have earned on sale of commercial property.
Okay. Okay. So the whole amount if invested, there is no capital gain tax.
Yeah.
Okay. So in order to save the capital gain, what are the means where we can invest, or we can buy for the capital gain tax saving?
As we were talking, if there is a capital gain on sale of a residential house,
Okay.
and the capital gain is up to 2 crores of rupees,
Okay.
then you can invest the entire amount in more than one houses. That
Okay.
means
So we can also buy 2 houses.
you are allowed to buy 2 houses.
Okay.
Even if you are already having one more house already.
Okay.
So you can have 3 houses in all.
Okay.
But the condition is the capital gain on the sale of the property that you have sold should not be more than 2 crores of rupees.
Okay.
And then in case the gain, there are other situations where you can save money by way of out of capital gain earned on long-term capital asset, that you can have an option of not buying any property, or if the value of property bought is less than the capital gain earned, then up to 50 lakhs of rupees you can invest in infrastructure bonds,
Okay.
which are prescribed by the government. At present, these are issued by National Highway Authority of India and Rural Electrification Corporation.
Okay.
The only condition with this bond is that the money is blocked for 5 years. It earns an interest of about 5.5% at present, and you save 21% approximately on capital gains also. Effectively, this is also a very good scheme for people who don't want to buy another property and block the money for a long term.
Okay.
So they block the money for 5 years, and after 5 years the entire money is available for their use, and during that period it earns interest also
Okay.
and saves capital gains.
So that interest is equivalent to the bank rate, or it's lower,
Yeah,
or it's higher?
it is equal to the bank rate, is 5.25 or 5.5%. It is in that range.
Okay.
So which is as good as any FD interest even by the banks today.
Okay. Okay. So there's a lot of situations happening where NRI coming from abroad from other countries, they are selling properties, and then there is a for any national resident of India, if he or she sells a property, there is a 1% TDS which needs to be deducted at the time of the payment. But in case of the NRI, that TDS is pretty huge. Is there any way we can do something about that also, save some money there?
The law requires in case of NRI, if any payment is made to NRI,
Okay.
the taxes have to be deducted at the rates applicable under the Act.
Okay.
In this case, if NRI is selling a property, so long-term and that has been held for more than 3 years.
Okay.
So that it qualifies to become a long-term asset.
Okay.
So the rate of tax applicable is 20% plus cess and surcharge, which effectively comes to around 23.92%.
Okay.
Generally for NRIs.
Okay.
So one way is there is a provision under the law. If you find, and normally in case of NRIs does happen because they don't have any other income in India.
Okay.
And they are taxable in India for Indian income as any other Indian person. Like you are not taxed for 2.5 lakhs, first time 2.5 lakhs, then for next 5 lakhs there is a 2.5 lakhs, there is a different slabs, so 10%, 20% or 30%.
Okay.
So the average tax comes to be much lower than 23.92%.
Okay.
In case of capital gain. So they can apply for certificate from income tax office,
Okay.
where they authorize the person who is buying the property to deduct tax at a lower rate,
Okay.
which can be maybe 8 or 10% or 12% of the gross amount, depending on what is your income for that particular year.
So that will differ case to case basis.
It will differ case to case. If the NRI has any other income in India,
Okay.
so that income plus capital gain which is earned on the sale of property
Okay.
will be added together,
Okay.
and then the tax worked out,
Okay.
and then the average worked out, and that rate will be advised by the income tax officer for that particular transaction. It is transaction specific and person specific. It is not a general certificate.
And it for obtaining this certificate, the chartered accountant helps the person, or they have to contact somebody else?
No, it is the chartered accountants who render these services as
Okay.
part of their services which we render to all taxpayers or tax assessees, or we address all tax related problems of whether NRIs or individuals or companies or partnership firms
Okay.
or MNCs.
Okay.
Whosoever has any issues relating to income tax in India, whether capital gains tax or income tax, any chartered accountant can help.
Okay.
And it is main function of the chartered accountants to get all approvals done from tax authorities.
So there's another factor.
There is one more thing
Yes.
here. In case there is a situation when because this certificate takes at least 4 to 6 weeks to get obtained from the income tax office. Sometimes we come across people who just land to in our office asking for a certificate, deal to be done tomorrow and certificate required.
Okay.
In that case, it is nothing can be done. It is difficult, not possible to get a certificate in a day or two.
So people should plan, let's say, 4 to 6 weeks in advance.
That's when I started. When people think of selling, they should approach a chartered accountant.
Okay. Okay.
So that he can plan and devise everything and things move smoothly without loss of time and loss of money also.
That's wonderful. That's so
And
wonderful.
alternatively, in situation where you have landed a place where the tax has been deducted, then that NRI will have to wait for closure of the financial year, that is till 31st March, and in the month of April of the next year or next financial year, he can file the income tax return and claim the refund
Okay.
from income tax authorities. Whatever excess tax has been deducted is refunded online by the income tax authorities without any problem.
Okay. Okay. So coming back to another major factor, is there any GST applicable on buying or selling of real estate?
GST is a relatively new law, which a lot of people are still a lot of confusion because there have been a lot of changes in that. Even we keep struggling. We need to spend a lot of time updating ourselves and to keep abreast of it. As of now, if you buy any property which is under construction,
Okay.
you are liable to pay GST above the value of transaction value.
Okay.
If you buying a ready to move in property for which completion certificate has been obtained by the builder,
Okay.
then there is no GST involved. It is only normal transfers, taxes, transfer duty or stamp duty payable.
So any purchase done post completion certificate is obtained, there is no GST.
There will be no GST implication because that cost is already absorbed by the builder. So whatever price he will quote you will be inclusive of the cost he is already included.
And this only applies when somebody is buying a property from the builder, or let's say if two ordinary people are buying, selling, then too the GST is applicable.
If you are buying any property under construction, whether from a builder or from an individual owner,
Okay.
it will be subject to GST.
Okay.
Because that building under construction, if it is sold, then it becomes taxable property.
So that means if I'm buying, let's say, a 2, 3, 4, 5 years old property, there is no GST implication there.
No GST implication. Even if you buy a property which has just been completed the day before.
Okay.
Yesterday property is completed, the completion certificate is obtained, you do a transaction today, there will be no GST implication.
Okay. Okay. Just wanted to discuss if there is any real-time experience you must be having, or any challenging assignment that you must have taken. You like to share it with our audience.
Karan, I've been into the profession post 30 years now in my practice, and prior to that I have served as CFO in the company, also in the corporate sector. I mean, when there is tax, there is challenges every day, and with the changes in the taxes every year comes with new challenges. Right? Sometimes changes are retrospective, so you have to handle those problems also.
Okay.
But with reference to the topic on hand today, that is real estate or sale and purchase of immovable property.
Yes.
I'll give you a live example. I'll not name it. One of my clients, very old client with me since 1993.
Okay.
Right? The entire family, an exporter, and he bought a house, a very complicated transaction.
Okay.
He inherited a property. There were 3 shareholders in that property. He bought one, 2 of them bought one, it became 50-50.
Okay.
Then this person bought the other one, he became 100% owner. And during these transitions from stage inheritance to buying one, then stage 1 to buying the other 2 and becoming 100% owner, there have been constructions and additions to that building also.
Okay.
And post that he demolished the entire building, got a latest building constructed with the latest plans, G+4 with the street parking, and he sold 3 floors
Okay.
without having to pay a single rupee as capital gain tax.
Wow.
Now he is selling a 4th floor, he is doing a transaction now on which he will end up paying a capital gains.
That's wonderful.
So 3 floors is sold and no capital gain on that. That's
Okay.
how we planned, and he kept all the records
Okay.
meticulously, maintained all his records
Okay.
right from the transaction 1. And that's why I said in the beginning also, there's a need of consultant to consult somebody right at the time you think that you want to buy or sell a property, whether for personal use or commercial use or for whatever.
I appreciate Krishan ji for always this thing, that he always insists that you should always take a professional advice when you think of doing anything major. It may not be also real estate, but anything major to do with your financial transactions, you should always consult a professional and do take their advice. So as the changes that we are seeing all around us, are you seeing any new trends, any changes in the taxation industries as well?
Now, as I said, some touched upon during the discussion also, everything is going online now.
Yes.
You would see anything, okay, I'm sure people have now started buying even groceries online, making payment by Paytm. Now government has also taken a lot of initiatives, and all of us are aware now, everything is online and everything is now becoming faceless.
Okay.
It is more important now. Earlier if suppose something has gone wrong, you could have gone and physically approached the officer and made a request for alteration or change or rectification or verification.
Okay.
And maybe verbally on the face convinced him and tried to explain your
You had
point.
any earlier connections with the person?
Now everything is online, faceless. You do not know who's the person attending your call, who is the person who's attending your file.
Oh, really?
And in case of assessments, I would just first talk about being online. Everything is online. So whatever documents you have furnished is registered and recorded. Manually was also recorded, but then you could physically visit a person or officer and put up an official request, and within the rules and law, he would allow you, listen to you.
Okay.
Now there is no listening or no hearing. Everything is online. Whatever you write, whatever you submitted, you have to again document it, prove it, establish it. Then only if the other person is convinced with the document, records and evidence, then your application is heard or disposed of favorably. Otherwise you land up in problem. So you record keeping and proper record keeping and timely record keeping, because there are no delays allowed. If there is a delay, the system calculates fines, penalties, and the repercussions are beyond control of human person now.
Okay.
So I would advise everyone to be updated in terms of records, in terms of keeping records, maintaining details of all major expenses incurred, whether personal or official or business related.
Okay. Any tips that you like to give our audience, as a...
Karan, I think if you would really see small points or maybe comments I made, my tip is for any major transaction, whether business related or personal, I would always advise you to approach your chartered accountant or the professional who is helping you file your tax returns or your tax accounting, so that you don't land into a bigger problem. Earlier things could still be managed, now it is very difficult, because once the things are filed, it is gone. So record keeping and proper consultation and advice is very essential.
So the year-long tested advice, Neem Hakeem Khatra Jaan, is now exactly in place.
Yeah, then there is always khatra if you are really having people like Neem Hakeems to deal with.
Thank you, Krishan ji. Thanks a lot for your valuable time, and we are sure audience gained so much.
Thank you, Karan. Thank you very much for taking time out and giving me this hearing, and for me to explain the points and intricacies involved. Thank you very much.
Pleasure is all ours. I'm sure you must have gained a lot of insights from Krishan ji's interview, and gained some knowledge. In case you have any more questions, do write to us. We'll connect you to Krishan ji, or we'll get the questions answered for you. Thanks a lot. So wonderful feedback that you have given. There were a lot of questions on capital gains and GST regarding the real estate. I hope we have answered. In case you have any more, do let us know. Keep safe, stay invested.